So, good evening once again. So, we need to continue from where we stopped yesterday. We stopped at the diluted EPS. And I said we have a procedure that we need to focus while dealing with the diluted EPS. Also, the difference between the basic EPS and diluted EPS are not really much, but we need to understand the concept of diluted EPS. Number one is that you check your question, and probably if the examiner is not giving you the weighted average number of shares for basic EPS, then you have to calculate it. So that's why I say one of the procedure is that
Haji, off your camera. Actually,
so I'm back. So I said number one is that we have to calculate, this is what I said yesterday, we have to calculate the weighted, for us to recap, we have to calculate the weighted average shares, average number of shares for basic EPS. So this one is not new to us. It's not new to us because we did it yesterday. And also we have to calculate the equity earnings. So if we are not given earnings for basic EPS. Then number three is to compute. We have to compute the EPS, basic EPS, and we computing for basic EPS. And then number four, we test the convertible loan stock. And I said this convertible loan stock, you are going to use the formula using incremental. I explained this yesterday. Using incremental EPS formula. And I said we are going to demonstrate that today. EPS formula. So when you do all this, then you can now test for what? For diluted EPS. And if you want to test for diluted EPS, the formula for diluted EPS will be equal to so let me put it here. It will be equal to earnings that you get from your EPS, earnings from let me type so that you contain earnings earnings from basic EPS plus, because that any basic EPS, because yesterday we did the basic EPS, so that earnings of that basic EPS, you now plus it with interest. I said I would demonstrate this. I think I gave this formula yesterday, and I said I would demonstrate the formula. I said I would demonstrate the formula today. So, and I said it will be interest savings, and that interest savings will be interest. I'm coming, hold on, please. So, okay, I'm back. Interest savings net of tax of convertible loan stock. Convertible loan stock. Let me shorten it. Net of tax convertible. Hello, Alaji, are you there? Hello.
Hi, we can hear you.
Yes, I want to speak with Alaji. Alaji, please shout me directly.
Yes.
I
Yeah,
think,
I'm with you.
okay, I'll soon go off. I think my data is almost finished. You can shout me, yeah.
Okay.
Interest saving net of tax convertible loan stock. Loan stock. Convertible loan stock. So I think you can see it that way. Interest savings net of tax convertible loan stock. Then you now divide it with the number of shares. Are you still hearing me?
Yes, we can.
Okay. So you now divide it with the number of shares. That number of shares will be number of what? Shares of for basic EPS. Number of shares. So that number of shares I'm talking of for basic EPS plus. So what I want you to understand for this one is that what you are going to add to it, it is the number of ordinary share in exchange for conversion, maybe that convertible loan stock. But not always your dilution will be inclusive of convertible loan stock if the following condition is not met. For instance, hello, are you with me? Hello.
Yes, yes, we are with
Okay.
you.
So if I want to plus the number of shares of convertible loan stock, so let me add it. Then I will now tell you the scenario why you not be putting it there. So number of shares, in exchange, in exchange, number of shares in exchange of convertible loan stock. So what I'm saying is this. Let's assume when you compute for basic EPS, are we there? And you now maybe you arrive at your basic EPS, you arrive at, let's say, 8 naira for basic EPS. Are you following? Then when you now test for incremental EPS, that incremental that I said test for convertible loan stock using incremental EPS formula, this number 4. When you test for this number 4, probably you now got naira. You know, I said if your basic EPS, this number 3, if your basic EPS, let's assume it is 8 naira. 8 naira. And you test for this number 4, is giving you 6 naira. Which one is higher? Which one is lower? Is it basic EPS is it higher than incremental EPS formula? Which one is higher? Which one is lower?
Basic is higher than that of incremental EPS.
Okay, so if basic is higher, then it means that incremental is lower than basic. So as a result of that, when you are computing for dilution EPS, when you are computing for diluted EPS, that convertible loan stock, you have to include it. Meaning, if I'm saying number of shares for basic EPS, I will now plus the number of share of convertible loan stock as a result of that. But if it is other way around, that incremental, let's assume incremental is higher. Are we there?
Yes.
Let's assume incremental is higher. Suppose incremental EPS formula that I calculated, maybe it is 8 naira. Then that basic EPS, it is maybe it is that one that is 6 naira. Then as a result of that, when you are computing for your diluted EPS, so you won't bother to include it. Are you getting it? That's the scenario. Do you
So
understand?
the scenario is just that if the incremental is higher, we are not going to add that the number of the convertible over. Is that what
Yes,
it means?
yes.
No.
If the incremental is higher than the basic EPS, you are not going to add it. You know, I said under the denominator, I said number of shares for basic EPS plus number of shares in exchange of convertible loan stock. But this is where you now be checking whether incremental EPS is higher than basic EPS. Then if it is higher, excuse me, if it is higher, then you will not include it. Are you getting it?
Very clear.
So if the incremental EPS is higher than the basic EPS, you are not going to add the number of shares in exchange of the convertible loan stock. But if it is other way around, we have to add it. Is it clear now? Is it clear? Oh?
It's clear.
Yes.
Okay. Let's take example to back it up.
Yeah, example yẹn gangan ní kókó.
So, suppose DG PLC suppose DG PLC as $10 million, that person should move, please. 10 million, that person should move to 10 million ordinary share of 25 kobo each. In issue. And also add in issue in 2014 and also add in issue in 2014. One, 2 million of 14% convertible loan stock. Convertible loan stock convertible in 3 years. 3 years time at the rate of 2 shares at the rate of 2 shares per 10 naira of stock. Are we still there? Hello.
Hi, we are.
Okay. I'm just trying to check on you guys because I can I can time out anytime. 4 million of 10%.
I will read that question, that form, convertible in 3 years time
This time
at the rate of
at the rate
2
of 2
shares.
shares
Okay,
per
I
10
was listening
naira
to
of the
what you
stock.
said. You said 2 naira. Okay.
2 shares per 10 naira of stock. So 4 million of 10% convertible loan stock convertible in 1 year at the rate of 3 shares. 3 shares per 5 naira of stock. 3. The reported profit for the year ended 31st December 2014 was are we there?
Mm.
3,500,000. The rate of income tax is 35%. Required. What is the basic EPS and diluted EPS? Are we set?
Yes, sir.
Yes.
Olaleye, go ahead. What happened?
Nothing, no. Sorry. Okay.
So, based on what I explained earlier, for the steps that we need to know whether we are given the ordinary share for us to compute for basic EPS. Look at it. Suppose DGPSC has 10 million ordinary share of 25 kobo in issue and also had an issue in 2014. So all this in 2014, there is a convertible loan stock, but the ordinary share was given to be 10 million shares. Are we good to go?
Yes.
So, therefore, we don't have issue with line 1 here, which is a compute the weighted average number of shares for basic EPS. We have already given the other number of shares. Then let's check for line 2, compute for equity earning for basic EPS. Let's see. That one is a Roman figure 3 here. The reported profit for the year, it is 3.5 million, because I said it that earnings is also profit after tax. Then we also have step 2 here. Then step 3 is to compute for basic EPS. Then we now go ahead and say basic EPS is equal to earnings. What's our earnings? Earnings all over what? Number of what? Ordinary
Arisha.
share. Then our earnings is 3 million
500.
Yes or no?
Yes.
All over number of ordinary share, which is 10 million shares. So what do you have?
That's 35.
I didn't
We
get
have 0.35. If we multiply it by
Almost
100 to give
multiply by
us
100,
35.
0 point what?
35. 0.35.
0.35. That means In recent, this is 35 kobo, right?
Yeah.
So we can say you can pronounce this one 0.35, which is a 35 kobo. So if we don't want to put this, and probably you multiply with 100, automatically what you are going to write is just write 35 kobo. Is it clear?
Yes.
So 35 kobo, which is 0.35. So the second one is to test for what? Test for dilution. Abi? Then I've explained this. How will you test for dilution is by way of incremental what? Incremental. Hello, are you with me?
Yes.
Incremental
EPS
EPS
formula.
formula.
So that's what you use to test for dilution. And I said, okay, I think I gave the formula for incremental EPS formula yesterday, that it is interest savings net of what? Tax on convertible. So if I said interest savings, then
No, you didn't give us the formula.
yesterday,
Mm-mm.
okay. So as for dilution, you use what is called interest interest sorry interest net of tax, that is interest savings interest savings interest savings net of tax on convertible
Yeah.
loan stock. Convertible loan stock. Are we there?
Yeah.
So that is how to test for what's it called, incremental. So convertible loan stock all over. And you said I didn't give you this yesterday.
You
You
didn't,
gave, you gave us just
may
Okay.
I not
All
see it,
over number of ordinary share.
Yes. Of
Number of ordinary share.
basic EPS plus number of
Number of ordinary share that will be a change. That will be a change. Number of ordinary share, there will be a change for convertible loan stock. There will be a change for convertible loan stock. So if you now go to your question, interest savings net of tax on convertible loan stock. So you have to check the first one. You know, the question given to us it is based on the Roman figure 1. We have 14% convertible. Then when you finish, you now do for Roman figure 2 as well. So what they mean by what they are telling you is that interest savings net of tax. So interest saving they are talking about, it is 14% of 2 million naira. That's what they mean by the interest they are talking about. Which is equal to 14% multiplied by 2 million naira, open bracket, 1 minus tax. That's why they call it net of tax. 1 minus tax. And what is my tax? Don't let me put T. Let me just use it once and for all. What is my tax in the question? They said income tax 35%. Hope is clear. So that's what I mean by interest saving. That is interest. It is 14% of 2 million. That is interest saving of tax. Interest savings net of tax. That is after you remove the tax. So what is the tax given to us? 35%, which is a 0.35. Just calculate it. 14% of 2 million. You can, how will I put it? You can punch your calculator directly. 14% of 2 million, then multiply by what's it called? 65%. Because after you remove 1 minus 0.35, it will remain 0.65. And that is actually 65%. Is it clear? Will I continue? Hello?
Hi.
Shall I continue?
Yeah.
Okay. So divided by number of ordinary share, there will be a change for convertible loan stock. You know, if you look at it, if you read it very well, you are told that 2 million naira or 40% convertible loan stock, convertible in 3 years' time at the rate of 2 shares per 10 naira of loan stock. So we have to know the number of share that 2 million naira can give. So we now say 2 million naira divided by 10 naira. So you want to know the number of share. You know this one is 2 million naira. And if 2 million naira, if if 10 naira, if the share is per 10 naira of stock and you have 2 million naira, then how many shares is that? It means that 2 million naira divided by 10 naira. Then they now say at the rate
I
of
be sorry. The 2 million, is it not shares? Because we are saying 2 million naira divided
it
by
is
10
naira.
naira.
It is naira. 2 million naira
Okay.
is 2 million naira or 14% convertible loan stock. Convertible in 3 years' time at the rate of 2 shares. So that is why the formula was saying that number of ordinary shares, there will be a change for a convertible loan stock. So you now say multiply by that 2 shares. That 2 shares dimension. Then what do you have? What do you have, please? 2 million divided by 10. Are you still there?
We are here. Are we giving you total number or we
No.
should?
Give me upper,
The
the
upper one
numerator.
is 182,000.
182,000.
The
Numerator.
is
Denominator is what?
400,000.
400,000 shares. Don't forget that it is shares, because you convert it.
Okay.
Shares. Then what do you have in naira? That's why the formula was saying number of ordinary shares that will be exchanged for convertible loan stock. It means that convertible loan stock, it is 400 shares that will be exchanged for that convertible loan stock. So what do you have?
0.455. 455, or can say 0.46.
0.46. That is a 46 kobo.
Yeah. Other people should check, please.
It's correct.
So then, if
It
it
is
is
correct.
correct, you can easily calculate diluted EPS for only this one. Then when you now finish, you do the second one and also calculate what's it called, diluted EPS. Let's see.
Okay.
Diluted EPS, and based on the formula for diluted EPS, we said earnings from basic EPS. You already calculate the earnings that time. What is the earnings for basic EPS?
35 kobo.
Earnings, not any per
Three.
share.
Okay. Okay. 3,500,000.
Yes, earnings. I'm not saying any per share. Earnings 3 million
Okay, and 3,500,000.
plus. I said you should add
Interest savings.
interest savings net of tax
Not
of convertible loan stock. So
convertible.
what is our interest savings net of tax?
46.
It can't be 46 now. Interest saving net of tax 182.
0.65.
100. No. 182,000.
That's why I gave you all this formula now. Interest saving net of tax on convertible loan stock. And you know that it is this numerator. Then you've already got what? 182.
2,000.
Or it's not clear.
It's clear.
So the down part will now be number of ordinary share for basic EPS. So what's the number of ordinary share for basic EPS? Number of ordinary share for basic EPS.
10
10 million share.
million.
10 million. Plus, we want to know whether whether it is diluted or anti-diluted. And I have already explained how you are going to know. You test for this dilution, which is this 0.46. Compare with your what? Your this 0.35.
So 0.46 is higher.
is what?
So
I'm listening.
0.46 is higher now. So since it's higher, we are not going to add it.
That means it is what? It is anti what?
Diluted.
Anti-dilutive.
Noted. Dilution, whatever.
Do you get it now?
We're getting
Please
it, they come.
recap.
Any question?
Please recap the solution and the instance when we are the
Okay.
instance that make us to use the
I said this test for dilution, we arrive at 0.46. You now compare it with your basic EPS. So if your test for dilution is higher than your basic EPS, it means that it is anti-dilutive. It means that when you are computing for diluted EPS, the convertible loan stock for that Roman figure 1, the convertible loan stock of that Roman figure 1 will not be what? Will not be included in calculating diluted EPS. Is it clear?
okay.
In layman
Ask your
term,
question now.
if it's higher, you will not add it. If it's lower, you will add it.
What is higher, what is lower, madam?
Then now,
Basic EPS.
so no,
The
so
basic
no now. So let's look at the most easiest way to get it, or the most easiest way. If the test of dilution, the one with the formula, the one interest savings plus tax, that one I was saying that you didn't give us yesterday. If one we
okay, if
calculate
it is
that,
higher,
if it is
if it
higher,
is higher than the
you will
basic
not,
EPS.
yes, you will not add it. But if it is lower, you will add it.
Okay, okay, okay. Okay. So
Ibrahim,
because it
I'm
is
clear,
higher
Abi.
now, we are not adding it.
We are not adding it.
So is it clear now?
Yes, sir.
So this is called what's it called? Anti-dilutive, because of test for dilution is higher than our basic EPS. Then as a result of that, we are not adding it while computing for diluted EPS. So you don't need to calculate diluted EPS. That's the logic. Is it clear?
Okay, it's clear. So that means if we're not adding, that's how we now have to do the calculation and add and
Yes,
subtract. All
yes.
right.
So you don't need to calculate diluted EPS for that 14% convertible loan stock, because test for dilution is higher than your basic EPS. So we now move to Roman figure 2.
So I think we can try this one.
So that Roman figure 2,
It's-
it is a 4 million 10% convertible loan stock. Then you have to test for dilution as well. Test for dilution. So, and I gave you the formula. It is what? Interest savings. Interest saving net of what? Net of tax. Net of tax. Convertible loan stock. Convertible loan stock.
5 naira divided by 5 naira.
All over what?
All over number of ordinary share.
Okay.
That will
Number
be exchanged
of
for
ordinary
convertible
share. That will be
number
what?
of- that will be exchanged for convertible loan stock.
Okay. Number of ordinary share. That will be a change. That will be a change. That will be a change for convertible loan stock. So, as a result of that, then we move on. Say is equal to how many percent? 10% of what?
Of 4
4
million.
million.
4 million net of tax. You say open bracket 1 minus tax, which is
0.35.
0.35. You close it all over number of share that you can exchange for that convertible loan stock. It means that 4 million naira, and they say it is share, it is 3 share per 5 naira of stock. So it will now be 10 million. 10 million divided by what? Are we there?
Yes, we are there.
Yes, I am.
Is it 10 million or 4 million?
Hey, sorry, 4
Well, 4
million.
million is
4 million divided by 10 naira.
Divided by 5 naira.
Divided by
Hey,
5
sorry,
naira.
5 naira to multiply
3
uh,
by
shares.
3
3.
by
shares.
3. 3 shares.
So numerator, what do you have?
260,000.
260,000.
260, 260,000 naira. Denominator,
2.4.
2.4 million.
2,400,000 shares. So what do you have?
10.83.
10,
0.83.
10.83. That is 10 naira 83 kobo.
Yes.
10 kobo.
Can
That
it be
means
10
wrong
kobo?
now. Just call what you have for me. Just call, don't multiply anything. Just call it for me.
It's 0.10 now. It's not 0.10 you have.
0.108.
So it's 10 kobo now.
No, it's a
Don't worry.
60,000 now. Why will it be 10 kobo?
Don't worry.
Approximately
Just call.
0.11.
Just call what your calculator is giving you for me.
0.108.
0.8.
0.108. This is what you have, Abby.
Yes.
So that means that means
Sorry,
that means
sorry.
uh, that means we cannot have 108 kobo, then multiply it with 100 and give me what you have.
That's
Yeah,
10.8.
10.8 kobo. I'll be
I
11
don't say
kobo.
10.8 kobo, just give me what you have.
10.8.
So you have 10. Sorry, I want to clear this. Then you have 10.8, Abby. So when
Yeah.
you approximate it, that should be 11 kobo.
11 kobo. That's what I'm saying now.
This thing is not clear. Okay, 11 kobo. That means 0.11. That's the meaning. You understand? 11 kobo. So now compare. If you want to calculate for diluted EPS, let's confirm. We have 11 kobo compared to 35 kobo.
So we add.
That means we can compute our diluted
EPS.
So what is your basic?
3.5.
Basic was 3,500,000.
3.5. Basic earning
Okay. Plus
plus
260,000.
260
260,000.
all over number of ordinary share for basic EPS. What's number of ordinary share of basic EPS?
10 million.
10 million.
Ooh.
10 million plus what?
11
Number of
kobo.
ordinary share exchange for convertible loan stock.
11
11
kobo.
kobo.
No. Number of ordinary share. Look at the formula I gave you now. Don't do mistake.
So it will be 2,400,000.
Yes. Look at the formula I gave you now. Plus number of ordinary share exchange of convertible exchange for convertible loan stock.
Okay.
Where do you put it that time? Is this one now?
So that's 4 million divided by 5 naira times 3 years.
So what do you have? This one will be 6.1 million, if I'm not mistakenly.
How?
Divided by
260 plus 3.5. Ibrahim is 3,760,000.
sorry.
10, 12
That's
million
12.4.
400
What do you call it?
3,760,000.
3 million 760.
Divided by 12.4.
0.30.
304.
0.303.
Zero point 30.
03.
No, that should be 30 kobo now. 0.30. That is 0. Yes. That should be 0. That is 30 kobo. Hope it's cleared.
Yes.
Are we good to go?
Yes.
So if you see something like this in exam, you'll be able to do it.
God help us. If you memorize the steps.
Okay, oh, no problem. So far you can do it, there's no issue. So can we do more illustration? Can we do another illustration?
Let's try it, sir.
Hello.
Let's try it.
Okay. ADES PLC. ADES PLC. I still have like 3 examples to treat. Then out of the 3, for any question on dilution, then we should be expecting it. Because I think the question is going to based on the EPS and the diluted.
Is that what Sonyolu told you? Because you're sounding
Yeah,
like
I
you're the one
don't
that
know.
want to send the question.
Nobody told me anything. No, me, I don't know. I'm only saying it, yeah. So ADES PLC has 20 million ordinary shares. Ordinary shares of 25 kobo in issue as at January 1st, 2015. The company also $20 million, 40 million convertible loan notes throughout 2015, on which interest of 5% per note was payable annually in arrears. the carrying amount
IPR
of the liabilities element, the liability element of the loan note as at January 1st, 2015 was 23 million 000, and the effective interest was 7%. The rate of tax is 25%. The loan notes are convertible into ordinary shares from January 1st, 2016 Are we there?
Yes.
Hello?
Yeah, yeah.
2016 at the option of the note holders. Note holders. The conversion term are one ordinary share
Now, wow, this question long go.
for every loan note head required okay. The reporting profit for the year ended 31st December 2015 was 6.4 million. required. What is the basic EPS and the diluted EPS?
Bismillah.
Yes. I think you can finish it.
We are finished it. Don't worry.
Something that somebody cannot interpret.
This question you can interpret.
Girl, that's nothing. Depends. Ẹ̀yàn máa tọ̀ sára téèyàn bá rí léyìn ni.
IB, oh yeah, your battery is going low. I hope there is power.
So, what can you do concerning the
Basic
question? What do you
EPS.
think? Okay, you can do only basic EPS. Okay. So if you can do only basic EPS, then you don't have any issue again now.
There's no really issue, but this one, there's no really 2 shares per one. Should we just calculate that one straight?
Because if you can do basic EPS, you are good to go now. There's no issue again for you to calculate basic EPS. So, So, what you will do? So, who can read the question for us here? Let's understand the question first, and let's see.
Adex PS.
Okay.
Adex PSC has 20 million ordinary shares of 25 kobo in issue.
So we have to be specific. As 20 million naira. There's even between. So I want you to understand something. Look at the first question I did here.
Okay.
I didn't put naira.
20
You get my point now?
Okay.
Then here I put naira. So you need to understand the concept of the one without naira and the one with naira. The one with currency or the one without currency.
Okay.
Right.
So 20 million naira ordinary shares of 25 kobo in issue as at January 1st, 2015.
Go ahead now.
I'm comparing my note with what you have. I think is the company also had 40 million convertible loan notes throughout 2015, on which interest of 5% per note was payable annually in arrears. The carrying amount of the liabilities element of the loan note as at January 1st, 2015 was 23 million, and the effective interest was 7%. The rate of tax is 25%. The loan notes are convertible into ordinary shares from January 1st, 2016 at the option of the note holders. The conversion terms are ordinary share for every loan note held. The reporting profit for the year ended 31st December 2015 was 6,400,000. What is the basic EPS and diluted EPS?
Okay, that's interesting. So
Very interesting.
let's assume you are the one that want to calculate this basic EPS. how will you calculate it? Let's say basic EPS. How will you calculate this basic EPS? Anybody? Who want to try?
Basic EPS. Our usual formula now. Earnings all over. Sorry, number of ordinary shares.
Earnings. And don't forget that this earnings, if there is a
my
preference dividend,
preference share. We'll remove it.
you remove it.
Number of ordinary shares. So now, because this one is in value, that means we are going to times the 25 kobo.
Number of ordinary shares. Of ordinary shares. Who want to try and give me answer? So if I want to calculate my basic EPS, what will I put? Who want to try?
6,400,000.
Which is my earnings? 6 million.
Yes.
Mm.
Am I talking to one person?
No, you're not. So look, the profit for the year 2015 is 6,400,000, which will be over. Then the number of shares will now be 200,000 divided by 25 kobo.
20
I don't know.
million.
Yes,
20
that's
million.
correct.
20 million. And that's what I
That's
think.
correct.
Is it divided
That's
or
correct.
times?
It's
You will
divided
divide
now.
it.
It's naira
Divide.
to the 2 million naira divided by the 25 kobo each. You will now get the number shares.
That's correct.
20
Clap for
million.
yourself.
Justina.
I've clapped.
So 20 million divided by 25 kobo to know the number of shares. That's what I said. The one I gave the last time is different from this one. But this one carry value. This is actually the value of the ordinary share. And this is the nominal value of it. Then to know the number of share, you have to divide it to know the number. So compared to the one we did,
So if you will
our
multiply in
example
naira,
one, you know that this one is a 10 million ordinary share. It is number of shares, not value. So what do you have for your basic EPS? What do you have?
0.08. Please, other people share kilo.
0.08
It's correct.
kobo. Then we now test for what?
For dilution formula now.
Test for
That's for
dilution. And when you are testing for dilution, I've shown you what to do, that it is interest saved net of tax on convertible loan stock.
So that would be
And I said all
5%.
over number of ordinary share, that will be a change for the convertible stock. Then, if you want to get the interest, if you look at this question, we said the company also had 14 million convertible loan stock throughout. Are we there? Hello.
We are there. We are there.
Okay. Throughout 2015, on which interest of 5% per loan
5%.
note was payable annually in arrears. So the carrying amount of liability element of a loan as at this was 23 million. That's the carrying amount of that loan. So it was 23 million and effective interest rate was what, 7%. So this is your concern for the value. You get it now because you are calculating what was it called? Interest savings net of what? Tax on convertible loan stock. So this is the carrying amount of the liability element for a loan, which is 23 million. Then we say how many percent? 7%.
7%.
7% multiplied by
23 million.
23 million
Bracket 1.
1 minus tax, which is
5%.
0.25. Then all over what? Number of what? Ordinary share. That will be what? That will
40
be
million.
a change for the convertible loan stock. And I think we are given the number of shares that will convertible for. You can see the company also had 40 million convertible loan stock. You have 15. Then we have 40 million divided by, because
I
the
was thinking we'll
examiner
just
was
use the 40 million like that.
so let's assume there is the option. You can see the loan notes are convertible into ordinary share from 1st of January 2016 at the option of the loan holder. The conversion term are one ordinary share for every loan note head. Is it clear now?
So it will be 40 million.
Divided
Nothing
by
to do.
it's divided by 1. Don't worry. Divided by 1. Divided by 1 note. That is just 1. Then multiply by 1 share because
One
they sell
share.
for
One
every year.
share, one note.
Yeah, that is 1 share. Hope it's clear.
To me, it's clear.
So what do you have? Figure me, please.
Hang on 1 minute.
Zero 0.03.
Is it fine? No, I don't need finance out.
Which one? Where are you? Okay, one
I
million
need
two
the
207,500
I
divided
need
by
numeric 1
1
million.
million 207
Uh-huh.
500
Okay.
divided by 40 million.
So what do you have?
0.0.
0.0.3.
0 point
030.
0.03.
Yes.
That is 3 kobo.
Mm-hmm.
So then we can now compare this and the basic EPS. Which one is higher?
Basic.
Basic is higher.
Mm-hmm.
Yeah.
So if basic is higher than diluted, what is the implication? We are going to do diluted EPS, right?
Mm.
Yes.
Then diluted EPS
Mm.
can be equal to what? It be equal to earnings for
6
basic
million
EPS. What is the earning
400.
for basic EPS?
Yeah, my back on.
Plus what? Plus interest savings net of tax on convertible loan notes, right? How much is
Yes,
Mm.
that?
1
1
million
1
million
million
500.
207,500.
500 divided by number of ordinary share for basic EPS.
80
What is the
million.
number of ordinary share for basic EPS?
80 million.
80 million. When you divide this and this, Abby,
Yes.
No, when
Yes,
you say
80 million. Yes.
0.25 kobo, I mean divided by 0.25 kobo.
Momo, come back to class. It's 80 million.
80 million.
And how do we get the 80 million? That's what I'm trying to explain.
This and this will give you that 80 million because that's the number of ordinary share. Plus, so plus the number of ordinary share that will be exchanged for a convertible loan note. How many shares is that?
40 million.
40 million. So the logic is very simple. When you are computing for diluted EPS, just get your basic earnings of the basic, then plus it with that test of diluted. This one, this one. Look at this. This is what you are bringing here. If you
So bring
understand,
the up, put the up, put the down.
yes. It's just like you are putting this and you are putting this. You just add it.
Okay. All right. Thank you for that logic, sir.
So what do you have?
7,607,500.
For the
7
upper
million 607
500
500. Okay.
divided by 120 million.
What do you have?
0.06.
0.063.
0
0.06.
0.06
3.
kobo. That is 0.06 kobo. So this
There's a
is
3
what
there. Oh.
yes, no.
Justina,
I don't have
do you
to
want
do
So,
to
it.
add
yes, I want to
60?
add it.
Add it.
So that is
I want
the
to use
logic.
that one
So
for 5
the
marks.
third illustration, we are going to look at it tomorrow by the grace of God. I think that will be afternoon or in the morning. So we meet.
Are you meeting in the school online, sir?